Steward Wealth Strategies, and thank you for investing a few minutes of your time as we discuss the 2024 third quarter economic update. Here at Steward Wealth Strategies, we believe that knowledge is power. To be a good steward of the financial resources you've been entrusted with and blessed with, we all want to make wise decisions. We want to give good advice, and you want to make sure you're doing the right thing with the resources that you have. And part of this knowledge is just understanding that there's more to financial planning than just our investments. You know, financial planning encompasses investments, but it also entails strategic decisions when it comes to retirement planning, tax planning, estate planning, protection. And also, we believe that we're blessed so that we can we're blessed so that we can be a blessing, and that generosity should be and is a major component of a financial plan. Now, we all have concerns right now, though. We're all seeing headlines on a regular basis, and there's a lot of concern when it comes to the equity markets. Think about the headlines: market volatility, political unrest, interest rate changes, inflation, and there is an upcoming presidential election. But with all those headlines, even though we've seen a lot of volatility this year, the market has still reached recent all-time highs. So the concerns that people are having has to do with inflation, rate changes, recession concerns, a dreaded R word, what's happened geopolitically in the world, and then also who's going to win the presidential seat. So inflation is back to its lowest level since 2021. Interest rates were extremely low and then raised at a very quick pace to fight inflation, and inflation has scaled back. And in fact, interest rates recently were cut as well, and there's going to be another potential rate cut here soon. But we saw a time period of just extremely low interest rates. And then when inflation was starting to hit really hard after the pandemic, the Fed raised rates at one of the greatest increases, or one of the quickest increases we've seen in decades, which slowed the economy down, which helped fight inflation. But now that things have calmed down, the Fed actually lowered rates for the first time. So on November 7th, the Fed may cut rates again. The Fed will meet and they will make a decision as far as a rate cut between now and the end of the year. So there's key economic indicators that are watched, and that will determine whether there needs to be a rate cut. Inflation is still a concern, even though it's low. I know a lot of folks are concerned about recessions. You know, a lot of times when times are good economically, there are folks that are always waiting for the bad to happen. And there are recession concerns. If the economy slows down, or depending on who gets elected, will we enter a recession? But a lot of analysts right now actually feel that we are out of the woods. But there's always going to be some that think, hey, it's going to rain. And others are going to say, hey, we're going to have a beautiful sunny skies. Economists can't predict the future, but they can make opinions based on facts and what we know and what they think may or may not happen. Geopolitical unrest. The global economy is still in a vulnerable position. There's a lot of concerns out there still. Look, we still have the war between Russia and Ukraine, conflicts in the Middle East, coupled with trade concerns with China. This all contributes to geopolitical unrest. Equity markets do not like uncertainty. Uncertainty creates volatility. We will keep an eye on what's happening and how geopolitical issues may affect the markets here in the U.S. The U.S. presidential election. We're not going to get political, but this is an election year. We recently hosted a WebEx talking about what the markets look like over the past 9 decades after each presidential election. Remember, you're invested in your portfolios in the great companies of America. And those great companies are going to try to produce goods and services that people are going to want to spend money on, or companies are going to want to spend money on, regardless of who is in the White House. Now, the White House can influence and lead us in certain directions, but just know we are not investing in the government. We are investing in the great companies of America when it comes to your portfolios. There's influence and there's reactions that may come from who wins in November. But if you go back over the past 9 decades, it is almost split between Republicans and Democrats. And if you look at how the markets have performed over the long term, just look at a 10-year cycle after each one of those elections, over the past 9 decades, all of them have produced positive outcomes except for one. And that was the lost decade from 2000 to 2010, where the market with a lot of volatility was pretty flat. But we went through 9/11. We came off the burst or the bust of the dot-com. We had one of the worst recessions in 07 to 09 since the Great Depression. Markets, even with all that volatility, though, even with whoever's won or not won an election, markets have still grown long term and created a lot of wealth for investors. So, fourth quarter tends to be a really good quarter for investors. If you look at just past 70 years, you can see by this chart, quarter four generally has the highest rate of return. I'm not trying to predict. This is not guaranteeing any sort of results. But if you think about the past 70 years, there's a lot of difficult fourth quarters in here. This is when the elections have happened. This is also, if you look back and think about what happened in the 80s with October of 1987, when the market collapsed and it had its worst single day in history, that was in fourth quarter. When you look at the past 70 years worth of returns, 78.6% of the time, Q4 ended the respected year on a high note. As we head into the new year, we will keep a very watchful eye on these equity markets. And remember, fourth quarter is also the time for a lot of giving. It's also the time for a lot of spending. And sometimes there's the Santa Claus effect when Americans go out and spend and become strong consumers. We have to focus on the long term, though, when it comes to our investments. That is the strategy. Be a long-term investor. Anything short-term would be more considered gambling. When you go back 10, 20, 30, 40 years, look at the S&P. The S&P 500 looks at roughly the largest 500 publicly traded companies in the United States. If you've been a long-term investor, the S&P has created significant wealth. There has been significant growth. But in any one of those time periods, there has also been a lot of volatility. If we just think about the past 10 years alone, what have we seen over the past 10 years? We've seen a global pandemic. We've seen low interest rates, high interest rates, low inflation, high inflation. We've seen Democrat in the White House and Republican in the White House. But if you've been a long-term steady investor and you've stayed disciplined, you've seen positive results. But as all financial people will say, past performance does not predict future results. We need to exercise caution. We need to know that we're always going into uncharted territory, but history has shown us that if you stay the course, ride the ups and downs, you've done well. Now, if there is concern, what do we need to do as investors? What should we do? Calm heads will prevail. We want to avoid knee-jerk reactions and emotional decisions when it comes to our finances. We have to always evaluate our risk tolerance. If you're a client of Steward Wealth Strategies and you have a meeting with us or a conversation with us, majority of the time, we're going to take your temperature. We're going to have you fill out a risk tolerance questionnaire because we want to see, are you comfortable with volatility or are you not? It can change over time depending on other influences in our life. What's your time horizon for your particular objectives? Is it a long-term time horizon where you need these retirement funds to last you and your spouse's lifetime? Or is it a shortening time period where possibly the investments are to cover college expenses? And like me, I now have one in college, so that might warrant a more conservative approach. But then also we have to think about the behavioral aspect. We know it's personal finance and not just finance. You know, finance is numbers, but personal finance is the people, the family, the goals, the dreams, aspirations behind. And it's also the concerns. And the most dominant human emotion is fear. Jesus talked a lot about fear, and the Bible says a lot about fear not. We have to be careful letting fear drive financial decisions. We wouldn't recommend it to somebody else, and we have to try to fight it as much as we can for ourselves. So we have to have a game plan. And that's why we at Steward Wealth Strategies believe financial planning focused on developing a strategy based on your goals and objectives is core. And the investment decisions and the advice we give for your retirement decisions is based on your financial plans. We want you to focus on your goals and dreams and what you're trying to accomplish, and let us focus on the strategy. Let us focus on the investments. Warren Buffett is full of wisdom, and Warren Buffett has many great quotes. Successful investing takes time, discipline, and patience. I think most of you would agree that Warren Buffett is a very successful investor. And if he has advice, it's probably worth paying attention to. And if you were talking to a young person today, would you agree that successful investing takes time, discipline, and patience? Probably so. So proceed with caution. Know that there's going to be volatility. Know that there's going to be headlines out there. Inflation's still a concern. Interest rates will continue to fall, but the Fed will make those decisions. And a recession is always a possibility, but long-term focus, long-term investing, discipline is key when it comes to a successful strategy for equity markets. But your team here at Steward Wealth is here for you. As we go through these time periods, if you don't have a meeting lined up, or maybe you haven't met in a while and you just want to have a quick conversation, calm heads will prevail. Let us be the calm in the storm. That's why we produce these webinars, and that's why we touch base periodically, because we know that every one of us, all of our clients, even our team members here, if you listen to the radio, read articles on the internet, watch the news, the headlines out there are there to grab your attention. They're there to get your attention. Politicians want to get your vote. And the most dominant human emotion is fear. The old saying when it comes to media, if it bleeds, it leads. The shock headlines that cause concern will get our attention. But be careful. Don't let emotion drive major life financial decisions. Let us help you avoid knee-jerk reactions. Reach out to your wealth manager here at Steward Wealth Strategies. Shoot us an email. Respond to this invite you got for this webinar. We are here for you. If you have any friends, coworkers, family members that are concerned, that you think would really welcome a second opinion, please introduce us to them. Add somebody to our mailing list. Invite them to a breakfast or lunchtime presentation that we may host. But I want to say thank you to you, because without you, there is no Steward Wealth Strategies, and we are honored to serve you. Our team is here to take care of you and your family when you need us the most, but also we're here for you when there's concerns and questions. We truly appreciate you, and I hope that you and your family do well as we enter this fall season. And God bless you. Thank you very much for allowing us to serve.